Hey, my name is James Nicholson. In this video, I want to talk about the mortgage crisis. What's happening at the moment? You see, there's 25% of mortgage holders in the UK that in the next 12 months are unlikely to be able to make every single payment in the year. They're likely to go into arrears. Now, that's not good. That's not good for them. That's not good for the economy as a whole. It also could impact house prices because potentially those properties could get repossessed. That could cause a house price crash. So I've got some data here today that I want to share with you. I want to talk about what is happening in the market, what I feel needs to happen in order to get this back on track, and what you can do to protect yourself. Or maybe you know someone else that's having a little bit of a difficult time. Maybe you could share this video in the corner over here, then you can WhatsApp it, Facebook message to them, email, get it out to them and help them. Before we jump into this, as always, we might have hit 24,000 subscribers or we're close, but we want to hit 25,000 subscribers now. Of course we do. So while you're here, make sure you subscribe to the channel over there and hit that bell notification. Smash like, tickle like, do something to the like button. That really helps with the YouTube algorithm. And I want to get the message out on this video. So doing that will help greatly. So what's going on? Well, obviously, we've had a very difficult few years. We've had a pandemic, which hit lots of businesses very hard. Businesses were able to borrow money. They had the furlough scheme. They had the bounce back loan scheme that did help a lot of businesses, but we've got to pay that back. The Bank of England kept printing lots of money. That drove up inflation. We had supply chain issues. We had, when the world opened again, everything was backlogged and prices just went through the roof. And inflation peaked at over 11% in the UK, much higher in other places. And certain products like food went up significantly more than 11%. And it really hit people very hard. Now, the Bank of England only have one real tool that they can use in order to try and push inflation down, and that's interest rates. Now, normally they would raise interest rates so they were higher than the inflation amount, but you couldn't do that in this scenario. We were at 0% interest rate, 0.1%. You couldn't go to 12% interest rates in one hit because it would just destroy everything, particularly buy-to-let landlords. The rental market would have been crushed because a buy-to-let landlord pays interest only. Some were on 1% mortgages. If you made them then go to 12%, that means their payments would go up 12 times. Now, that means that potentially rents would have to go up at a similar rate, 6, 7, 8, 9 times. And imagine if that happened, people just wouldn't be able to afford stuff. So they did raise interest rates 14 consecutive times, and that was used to push inflation down. And just time, right? So time helps with inflation because as long as prices don't continue to rise, eventually that inflation number will drop, and drop it has. So now the inflation data is 2 point something. Can't remember, 2.6 is it? Comment below, let me know, I've forgotten. I think it's 2.6. But the interest rates are still very, very high. They need to be moving those down because they're causing a lot of pain for a lot of homeowners. So how many people is this impacting? Well, it's staggering numbers. It's 1.6 million people who have a mortgage. There's 7 or 8 million people in the UK that have a mortgage. 1.6 million of those people are expected to not make all 12 payments in the next 12 months. They're expected to miss payments or go into some sort of arrears. Now, this could be due to the fact that they've lost a job because the job market is getting tougher for sure. But it's more likely down to the fact that their interest rate could have gone from 2% up to 6%. Buy-to-let landlords, that's a triple in payment. On a repayment residential mortgage, it could be close to 30 to 40% more. That's a huge hit for a lot of people. Included in that, you've got to understand that then energy bills might have gone from 600-700 quid a year to 2.5 grand, which in that time was very, very difficult. So this is not great. So it's 1 in 4 that are really starting to feel the pinch of this. Now, there is something that you should look at if this is you. I've talked about this a lot on the channel. It's called the Mortgage Charter. And this, to be fair, was probably the best thing that the Tories did this year. They didn't do lots. But this one was good. And what it means is you can go to your lender and for any reason, you can say, look, I want to move on to interest-only payments. And that should cut about 30% off your monthly payment, which is good, right? And so that will make a big difference to your payments. And so you'll just go to interest only for a period of time. So you say, look, I want to move to interest only, then move you on to interest only, you stop paying the capital down that you owe, and then that just gets added to your bill at the end, right? But for 6 months, you could save in a pot the money towards your, well, you could just save that money up and you could use it to pay bills, or you could build a savings pot or whatever. You could do that for 6 months. What the Mortgage Charter also does is that it doesn't really allow repossessions to happen. So banks have really been talked out of repossessing properties during this period of time. And so that's given people a little bit of protection, right? Obviously, you've got to get up to date again. You've got to have some sort of plan, but you should look into the Mortgage Charter and see if that could help you. Now, repossessions are still happening and they are up at the moment. So repossession claims, this isn't repossessions that complete. This means that the bank has started the process. They're sending out the letters. They're getting towards court. Those are, for the last quarter, up to 5,182 claims, which is 40% up on a year. 40% up, which is huge. And considering it is tough to actually get repossessed at the moment, it means that this number is going to rise significantly. Now, these numbers are nowhere near the 2008 crash for sure. We've done some videos on why the market hasn't crashed recently, because people have been stress tested at these higher rates. But they weren't stress tested at the higher rates when all the food and energy and all this stuff was going up at the same time. So here's what I think will probably happen. I think the Mortgage Charter will come to an end. I hope Labour, if they get into power, extend it and let people stick on interest only. It'd be good if they could allow people to stick on interest only for another year, because I think that would take a lot of the pressure off. And in that time, interest rates will start to come down and then they can move on to a deal that's at a better interest rate, right? So that's important. I do also feel that if this doesn't get extended, you will then get that protection of repossession gone. And I think you'll see repossessions going up around 10,000 claims per quarter, which would still be lower than 2008, but it would still be massively higher compared to where we've been. And those people obviously will go through a lot of pain. They've got to find somewhere to live as well. It's just not going to be a great scenario. So my best scenario is that the Mortgage Charter gets extended. If you aren't on it already, see if you can get on that with your bank. Not all lenders do it, most do. But yeah, I think it does show house price wise that potentially there could be a lot more distressed buyers coming into the market at the end of this year. That invariably is going to push house prices down, right? And that is going to be something to keep an eye on. Let me know your thoughts on this in the comments below. Keep it nice, keep it polite. Smash the like button, do subscribe. Go and check out some more content on my channel. Maybe go and watch this video right here.